Rod Goosen Spooman for risk on our second trade of the day. We had to exit our video a little prematurely. We had talked about the market going down and shorting down to our first pivot level down here based on this low premium at 451. That worked out well. Now we're looking at shorting again. We're still dropping on the premium, so these little moves up are just a wonderful opportunity to get short. Looks like we're going to be seeing a lot of that today, and so we shorted it. Didn't get a real good fill here, so we're averaging in once again. We're in a little better position now at 58.25. I'd like to be a little better than that. But that's what it gave us. Okay, now we should be able to do a little better there. There we go. Looks like it's going to test that 60 level. Pardon me, 59.25 level. Can't see this morning. $59.25 is a good place to get short if you can get it. It might spike up. We got that premium here. Now, premium did this. We saw some step up really here, and then here. So a little move up. We got the 59.25 again. Oh, taking it back up to 60, are you? All right. I'll sell it to you. I'll sell it to you. Now let's get a drop. There we go. There's a nice drop in the premium. 59.75. There you go. All right, we got a good average in. Nice drop. Okay, so now we've averaged in at 59.50, and we're looking for this market to drop nicely. All the way back down to the low. Now, when you see that kind of thing happen, and you're short, that's a good reason to tighten your stop Now, I wouldn't see much of a reason to tighten it too much. Otherwise, you wind up getting stopped out and get nothing out of this. You'll get frustrated. But average into this. Taking it all the way up to 61. Yeah, 61, maybe 61 and a quarter. 61 and a half, possibly. We might see it go up that high. But this is an indication that this thing is kind of going to go up again. So even though we were pretty divergent here, all right, that bar right there, that was a strong bar up, and a good indication, that this market was going to be moving up a little bit still. Now we're divergent there again, as you can see. This bar was at 277. We're at 288. We're still divergent. Okay, now we are a lot more divergent at 330, but 288 is a good divergence right at the top there. So shorting it up here is good. And once again, you have an opportunity to average into that if you've got enough equity to do so. And we always recommend don't trade with more than half of what you are capable of trading with, because there will be times like right now, where if you were all in, say up here, you got nothing left to short it up here. So trade conservatively, and then if you need to use more of your equity available to average into a position, then do so. But don't hold that. I mean, there's no reason to. You see, we were averaged in the high 50s. Now we're averaged in at the 60s, and we still have plenty of, we just got in again, got out, took some profits, and we're fine. We're fine. So don't let you get, I mean, if you're real confident about the direction of the market, then don't let yourself just get stopped out because you set a stop too tightly. I hope that made sense. Okay, so we're moving back up again. Now I think we're just moving up to test that level, because you can see how, right at 61, just past it, at 61.25, the volume really drops off, and particularly at 61.75, there's just nothing there. So what we see happen often is that the YM will come up right into this 761 area, maybe 7, didn't even make it that far. But maybe it's going to do it now. Let's see. Yeah. We haven't gotten any real strong bars down on the premium yet, but here again, there's nice divergence in here. Although that looks a little bit off. That looks a little bit off. Let's refresh our chart. Okay. Now I don't, you know, some people are saying, yeah, you got so many lines in here. Which one is right? You know, don't whine. I'm sorry. I just shouldn't have said that. Just learn how to read this. Okay? Learn how to read it. Ah, 61. Okay. All right. I'm okay with that. Look at what happened on the ticky. Real nice drop on the ticky. It's still struggling to want to go higher. But anyway, you know, some say, well, you got too many lines up here. Okay, another good divergence there, 307. That's even better. So we've got a lot of threshold lines here because we want to be able to see more clearly where we're at, and sometimes there's too much going on. So change the settings. That's all you have to do, is just change the settings. It doesn't change how you read things. All this is doing is just plotting. And by way of plotting, you can then see how you're supposed to read this. But you don't need the plots in order to know how to read it. You saw us take shorts long before this plots. I mean, it takes 10 seconds to plot it with a right strength of 2. So all you need to do is just watch it, and you'll know whether or not this is a good time to short. Then it plots, and you got that as a record of where the premium was. But we're not recommending that you wait until it plots. So let's clean this up. We were using a right strength of oh, nice, very nice. A right strength of 2 and a left strength of 5 for our 5-second chart here. So that's fast. Oh, this is good. This is just exactly what we were thinking. And where's this headed? It's headed back to the low of them. Well, we think it ought to test 51.25, but maybe not. But every reason to think that it'll go down to at least 53.75 because you get a lower level on the premium there. So going back here, now before I change this, you see how busy the chart is. Now I'm going to change to a right strength of 50. No, I'm going to change it to 20. And watch. Let's watch to see how much this cleans up the chart. That's usually my standard. Okay, it cleaned it up a little bit. A little bit. I like a lot more vertical dimension when I'm reading the premium. So you saw this drop. That was a good drop. Dropped even more here, moved up again, and then dropped. We just don't want the lows of the premium to start going higher again. We really want them to go lower. So I think we'll see that happen here. Now, if it's still too busy, although it's not really going to make much difference here, Now, I mean, just from 9 o'clock here, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 plots. And if I change to the right strength of 5, I don't think we're going to see any change at all. 1, 2, 3, 4, 5, 6. No change. So 2 is fine. And you see, that's usually what I'm using. I'm using a right strength of 2. But once again, and we emphasize this, we've been emphasizing this with every indicator we've ever used. We've emphasized the same thing. You got to read the raw data. But this threshold indicator, I think, does a better job of showing you how to read the premium than anything that we've ever had, because it precisely identifies what you need to be looking for. So when it occurs, you don't have to wait. You don't have to wait for it to plot. Now, maybe you need to learn how to do that, but ultimately you don't wait. Because you know what to look for. And once you learn that, you don't need to have plots, although that can be very useful when it comes to reading the overall trend. All right. So our target is this low in here. And what I think I'm going to do is just switch over to our 520 chart. So that all we're working with is the ESINX. Like I said, I like a lot of vertical dimensions, so it's easier for me to see. So there's your low. There's, this was not tagged on the next bar. Look at that, 53.75. That's 54. Premium was at 53.75. That's the target. So we'll come back. Okay, nice drop in the premium here. So we'll take some profits at 55. We will, because this oftentimes will bounce right there, and then you'll get agitated because you see profits moving away from you. So we'll take profits there. But the premium doesn't lie. 53.75, that'll get hit. Okay. And when we hit 53.75, as we just did, you look at the premium. Is it higher than it was? And if it is, you may not want to hold. And it is higher. So we're seeing a little divergence in there, but we're still moving down because 51.25 was really the low of the morning. But you had real nice trade there. yeah, we had to average in a bit. That's okay. But so what? We just improved our position each time around, and down we came. So 51.25 was the low of the morning. So if we get down that far, we reevaluate and maybe go long. We had a naked bar up at 73.25 yesterday. That would be a nice long trade. Don't know whether that's going to happen, but we'll see. So that's the trade for the second trade for the morning. Maybe we gave you some good guidance with this video, and you see a little better on how to read the premium. The best indicator that there is the premium. There's no question about it. You do well to learn how to read it. Once you do, you won't need anything else. Market profile is helpful. Okay, I shouldn't exclude what we endorse, and we do endorse market profile. The problem with market profile is it really doesn't tell you whether or not you should trade at any particular level. It doesn't say that. It just gives you some general perspective on where support and resistance may be found. But the premium, no, the premium is a different animal altogether, and it does more precisely than any other indicator can. You learn how to read it, you won't need much else, if anything, to know what to do. Okay, so let's, what I'm going to do now is use one more I'm going to use one more chart just to give you the overall picture before we finish up. Okay, we went over to our trend chart here, and I'm using a right and a left strength of 24. Now this is a 5-second chart. That means there are 12 bars for a minute, so we're basically refreshing the chart every 2 minutes, roughly speaking. The pivot indicators here are set to 24 and 24. So doesn't mean that we will get a plot every 2 minutes, but we won't get one any less than 2 minutes. So what do we see here? As the market dropped as we expected it to this morning, it also began to rally back a little sooner than we anticipated as well. We thought this was going to continue to move down, but nevertheless it didn't. We had our first low bar here, and that was pretty predictive as well, which is all you need. So anyway, the market moved up, and so we're looking to short it now. What we're doing with this chart is looking for the trend. Right. So if the trend is short, what should you be seeing on the premium? Lower highs and lower lows. So you got to start somewhere, and that means you've got to be divergent. And here's your first big divergence. Now we'll call it divergent because really the market didn't start to move up, until here. So from that standpoint, we get these higher highs. Okay, we're getting somewhat higher lows in here, but we've got a lot of indication that we're coming back down as well, because these bars on the premium are really moving down. And we get our divergence here. So we're really going to start from here. And from here, you've got to see lower highs. Is that what you're seeing? You got a higher high here. That's not good. That's already telling you something's not right here. And while yes, the market did drop, it came right back up. And it didn't take long for that to occur. It comes right back up and it tests that level. Then, once it does, and this is the key, this has got to be lower if it's going to come down. And it does. It is lower. Now you get a lower high here and another lower high here. And that makes sense. So overall, we're short. Okay? Because that had to be tested. And we're not going to read it until it is. Now we've got to get lower lows as well. So we're getting lower lows here and here, and that's good. We got a higher low here, and we get a lower low there. That's even better. But then, as the market pivots off of these lows, we're naturally at a higher level. We should be. But that doesn't change the trend. A higher low again. It should be. But right before the main pivot, which is over here, although that is in fact the high, you get a lower high here on the, at least on that pivot, and then a lower high, a lower low on the premium, higher low on the Spoos. So that's predictive, and now we continue to see lower readings on the premium confirming the trend. And we came down to this level. We haven't gone lower, but we will. Just getting a little bit of buying going on up here. But the trend is still down. We do not see a major divergence at the lows, and we'll need to see that before this market really turns around. So just remember the direct relationship, and you won't go wrong. You'll understand what's happening, and you're also going to understand what's about to happen. Okay, you see how the highs here were tested, and the premium dropped quite a bit in here. Hasn't plotted yet. It will. But you can see the drop in the premium. Okay, so that's going to get tested. We're not done with this yet, but that's how we read it. Takes a little practice, takes a little coaching. That's what we're here for. But this indicator will do you a whale of good. And we're providing you with a tremendous amount of educational material in these free YouTube videos. So all you need is a good indicator to help you to visualize what's really happening. That's why we designed this. And with the coaching that we give you through these YouTube videos, you don't need to buy it from us. You can just go to the historical videos, see how we use this indicator to help us to read the premium, and now just get the indicator and away you go. It's just that easy. All right. that's our video for today. Watch for, oh, maybe we'll just wait until this comes back so we can prove to you that that's the way this works. All right. I'll just come back after we test that low at 52.25. Now we're going to take this opportunity just to show you, as we finally have a good example of why the indicator sometimes will give you a false reading. It's really easy to see that it's false just because where it winds up plotting doesn't make any sense. So for example, right in here, you see this line at 417, and then right below it says 429. It's all referencing the same bar. The indicator is confused for a good reason. It's lining up where the premium was in relationship to a pivot. Okay? And in order for the indicator to read where the pivot is here, it has to count the number of bars, and then it relates it back to where it relates back to the same bar number on the premium. And if that's confusing, let's just put the bar number indicator in here so you can see this. All right, this is a bar number indicator. All right, so this is reading the number of bars on data stream 1. It finds the same bar number on data stream 2 that the indicator does, and then it lines the two up. But we got a false reading in here. Why? The reason is that occasionally what will happen is that you'll get a bar where the open, high, low, close is the same. That's not a gap, but you've got many instances of this. Here, over here, over here, over here. And when it hit this bar, it correlated it down to the corresponding bar on the premium, and it didn't line up, as you can see. Now here's the premium. The low of the premium is 417, right there. Okay, but 417, pardon me, let me line that up again. There we go. 417 is the pivot bar. So that's correct. But it also picked up the previous bar, which was 429, because it counted a bar that it really shouldn't have. So you've got two different readings here. One's on the previous bar, one's on the correct bar. And now we're moving right down to the 51.25 low. So when you see that happen, all you have to do is just refresh the chart. Just refresh it. It'll line things back up. All right. And so now it eliminates that. Okay, get ready to go long here. Get ready to go long. All right, that's the substance of our discussion today. Look for a rally back up here and possibly a complete change in market direction, potentially here. If we're down to 50.75 and we don't go any lower and we rally back to 57, you got a 6-point move. That's a trend change. So we look for an opportunity to take a long trade in here. We're getting long as we speak. We should be trading, not talking. But there you have it. I'm Rod Kusin, Spoon for Risk.